Welcome to the podcast Bridging the Gap Student Founders in Canada. If you're a university founder in Canada, you have probably been told to build something, validate it, and pitch it. What nobody tells you is what actually happens on the other side of that pitch. What investors are really thinking, what they are looking for, and why two founders with equally strong ideas can walk out of the same room with completely different outcomes. GrowDome is a research-based knowledge space built to close that gap for university founders in Canada, translating how investors think into something founders can actually use. I'm Natalia Bueno, and this is a research-based podcast on investment readiness for university founders in Canada. Today, I'm sitting down with Agostino Menna, someone who has spent years on both sides of the table, as an early stage investor and as a professor in the Master of Management program of the University of Niagara Falls. So, hello, Agostino, how are you?
I'm well. Thanks for inviting me. It's great to be here with you.
So, before we get into the substance, can you walk us through your background and how did you end up working at the intersection of investing and academia?
So it started when I was a young man. I was influenced by my parents. My mother was an angel investor, even though 30 years ago, angel investor wasn't as organized as it is today. But she was placing small bets on local businesses here in Niagara region. So Niagara, as you know, is a very tourist-based industry here. So she used to place bets like on wineries, for example, and even like restaurants or hotels. So that influenced me, one. And two, my father, he was a businessman. Although he had a day job, he had a chain of commercial laundromats in the Niagara region. And so I think both of those influences really led me to believe that capital played an important role in starting a business. And I always had that in my mind as I grew up. And I found that basically ideas weren't good enough. You needed like capital. And again, not just capital, but capital was an important instrument. But you needed a team. You needed a way to develop it that would help entrepreneurs grow their businesses. So that was basically my background. And eventually, as any parent does, they encourage you to go to school, get an education. So I did that. And about 25 years ago, my father died unexpectedly. And I had to stay back and run our chain of laundromats. And that was kind of like my moment where I thought to myself, should I go to the capital markets, which was my dream, or should I continue as an academic? So I did go on to the capital markets after we sold our businesses, but along the way, some other things happened in my life that I thought I should at least get my PhD at the University of Toronto in case I wanted to do both. So I guess my academic stimulates me mentally, but the capital markets is more the exciting part of my personality. So if you could say I have two sides to me, I have an academic side to me and I have an industry side to me.
Sorry for about your father, and but at least now you know what you want to do for your life. And it's really interesting how you mentioned about the capital thing, how you want to work on it. So I know you have a business about it, right? What's the name of that?
So we started this fund when I lived in Montreal in 2022 when I was working at Concordia University. And I got some of my friends that worked in the capital markets for about 25 years. And I said, look, why don't we just create a fund and based on Canadian technology companies. And so it's just about 10 limited partners that run it. And my friend and I, Jim, are basically the co-founders of it. And it's been around for almost 4 years. It's not a big fund, but we write maybe 4 checks a year. And it's mainly in the Montreal area or the Southern Ontario.
That's really interesting. And in your investment decisions, how do you balance what founders says with how they say it? And can communication as itself disturb judgment? I mean, which kind of entrepreneurships go to follow you, like go for fun, and how they communicate to you, and what are the decisions that you made for that?
It's a difficult industry because at the very early pre-revenue stage of a company, it's difficult because they don't have information. It's we call it asymmetric information, which means it's information that's not really available because they don't have anything or history to prove that their company can actually scale. So that is a big challenge. So at the very early stage, pre-revenue as we call it, we really analyze the founder of the company. We look for that founder venture fit. Why you? Why can you do it? And why now? So these are very important because that, if you want to look at risk, that becomes our primary risk. As you go up the continuum, for example, as the company grows and it starts getting revenue, it becomes more successful, then the risk becomes execution risk. Can they do it? And then as they grow even more and you want to sell it or you want to go public, then it becomes valuation risk. It's along the continuum. But in our case, because we're early stage investors, the founder is really the focus. If the founder doesn't have that stamina, those traits, that resilience, then that will become difficult for us to invest in somebody like that. So I'm saying that the idea is important, but so is the founder. The founder is the one that's got to carry the idea forward into the market. And that becomes a challenge because you're not looking for perfection, but you're looking for what's reasonable. So I think that's important in our case is because you don't have much information. So you're going more on decisions based on intuition and exploration. And as opposed to like fact finding and questions, really the key to this industry in the early stages is we really have to scrutinize the founder himself or herself.
Oh my God, that's really interesting, but at the same is really difficult because I imagine to be in your position and see a lot of founders with a lot of ideas and you don't know exactly if it's gonna work or not. I mean, also for founders that they are in the university, they don't know exactly what is the real way that they have to make the things and how they have to put their ideas to investment that maybe is their first time, right? So, what do you think about what is the right way that these founders should present their ideas to of investment?
Well, I mean, from an investment perspective, I remember Bill Gurley, who's a famous VC from California. I liked what he said. And just to start off the answer to your question, you have to be right, and you have to have non-consensus, if that makes sense. In other words, the person that's presenting to you has to really have something that everybody else doesn't see, or it's not consensus. Everybody agrees with it. It's non-consensus. So you have to be right and non-consensus as an investor. So other than the fact that that entrepreneur, that founder has to have what it takes to do it, he or she has to be looking at something that nobody else sees. And then again, it has to go from an interesting idea, because interesting ideas are happening all the time, right? Universities, for example, in entrepreneurship class, it's about, okay, well, you have an idea, write a business plan, and then, pitch it with your pitch deck, with your PowerPoint slides. But in our industry, it goes beyond that. It goes from an interesting idea to a commercializable business. That's the difference between university entrepreneurship and actually interacting with the market. Is you have to be able to bridge that gap between saying, wow, that's a cool idea. I really love that idea. But in my case, that's not enough. You have to show me the evidence. And in a lot of cases, entrepreneurs are really too broad in their thinking. It's more or less is what Steve Blank said from Stanford University. He said that you have to get out of the building and start asking people. And you have to show evidence, because that's where the idea, we'll never invest in idea. We invest in evidence of that idea.
But in that way, so how can an inexperienced founder demonstrate that they see opportunities before consensus exists in a way that actually convinces investors?
This is a challenge. I think comes down to the actual founder of that business. They have to know their market really, really well. They have to be able to answer the questions. They have to know their numbers. Even though they're forecasts, they have to know the industry that they're competing in. Imagine if you play a sport, whether it's soccer, basketball, or whatever, you're not going to go into that arena against your competition without knowing the rules, without knowing who the players are, who you're competing against. In this particular case, you need to understand who your industry is and who the players are, because why aren't they doing it would be a simple question to ask. Why do you see that, let's say there's 20 or 30 competitors in a $50 billion industry? Well, they could be doing it too. What is it that you see that they don't would be one of the first questions I'm going to ask. And then obviously the other question is, why you? Do you have what it takes? I think that's an important consideration to take do you have what it takes? Why is the industry not seeing what you see? And is there a market for it? Is there evidence to show that somebody's going to put the hand in their pocket and they're going to buy it. Right? That's the ultimately is if you can validation, right? Because you could talk about an idea, you can talk about the business plan, you can talk about the pitch deck, but that's nice. We listen to that. But ultimately, we need to see what the customers are saying. In other words, has the market accepted it?
If they need it.
Of course. But what if they don't need it? What if they think they need it and they don't need it? Or what if you have to educate them on saying they need it? See, these are all like variables, psychological variables that you have to dig into your customer's head. And then some of it has to do with marketing. It's a lot of what founders do and what we try to do is more qualitative in nature. It's not quantitative. It's I need to get in your head and I need to ask you. I go, why is it that you want to buy this product? Why isn't it so? Usually an interesting question that we ask our founders is, let's say the solution that you have for your problem goes away. What are your customers going to do? That's a good way for them to think about it. Let's say your problem solution, that solution disappears. What is that customer that you think is going to buy it going to do now? That makes them think, right? You have to really think with first principles. What is the basic understanding of the problem, that problem solution fit? If they have that part, then they can move on to product market fit. And once they move on to product market fit, that's when you start to see the capital start to come into these companies because you're getting more traction, you're getting more validation. And of course, you're going to get investors that are going to come and knock on your door.
And with all your experience, do you have any maybe example about any business that they have this challenge and how you develop them?
Yeah, so I mean, there have many. We speak with at least 200 or 300 founders every year, like startup companies. I can speak on the last one I did. I'm not going to say the name, but it's from the University of Toronto. There was a team of scientists, and they were thinking of producing a wearable wristband for people that suffer from panic attacks and anxiety attacks. So I'm sure you're familiar with that's a very debilitating mental disease, mental illness. And in principle, they really studied it. They went through the unit economics. They asked customers. They weren't sure if they were going to do it a B2B or a B2C or a B2C, a B2B2C. They weren't really sure on the distribution channel. But one area that they really focused on was the strategy, is the go-to-market strategy. And they thought it would, if you're wearing a wearable and it has to do with a mental illness, then maybe it should be a medical device. Medical device industry is very difficult because you got to go through a lot of government regulation, which takes time. So then I thought, why don't you just focus on, instead of making it be a medical device, why don't you make it be a wellness device? You see, just that thinking changed everything. They don't need to go through all the medical obstacles because wellness is a different area. So once they start thinking that way in a deep, clear way, you can start to see that they're starting to understand how this product actually is going to make it in the marketplace. So it's not just about, okay, there's a problem, anxiety, solution, wearable. But where are you positioning yourself in the marketplace is an important consideration. That's when I know that founders are really having a profound, they're understand the problem at a level that nobody else sees. And then what we call an unfair advantage. Once you start having that discussion, that type of language, unfair advantage, then you can start to see that this could be successful. Because ultimately you really don't know. This is the problem in my field. It's not like, analyzing a company like Apple or Microsoft. They've been around for 50 years or whatever. They're going to be around tomorrow. They're going to be around next year, chances are. These companies, they don't have that. We don't know for sure. So I think that's important consideration that the founder really needs to understand in a profound way the industry and what's lacking in it.
Yeah, that's true. I think a lot of founders need to at least start thinking of that and the strategies also before they go to an investor. So what are the hardest trade-offs you face when evaluating early stage founders, and what typically makes you decide to pass?
Yeah, that's an interesting point. And we do this as a consensus. So this is not just me making the decision. This is a group of people who are my general partners. And the power that we have in my fund is it's small, that we even include our LPs. We include our limited partners because it's so small. Like my nearest, or our competitor, for example, has 800 LPs compared to us. We have 10, right? So you can see the size is much different, but so is the coordination and communication is just much smaller that we can talk with all of them. So I would say the number one to your question is we make a decision based on consensus. Number two, we look at the founder's humility. I think there's a difference between being confident and being arrogant. And, all of us on our team, we come from nothing. We started with zero. Our parents came here as immigrants and they built what they had up over the years. We were fortunate enough that once we got to that certain level, that we thought, you know what, we want to start looking for those founders that were like our parents, that had that humility in them, that they were like not afraid to do things and they would just like go for it. Like, so they weren't lazy, they were humble, they really had an understanding of success, and they really wanted to basically show that they had what it takes to come to a different country and to be successful. And that's why they came to Canada, because the opportunities here were so powerful vis-a-vis their own country that those are the kind of people that I think that our profile generally focuses on.
So you think like maybe it's one of the things that you see in the pitch, right? Like the coachability from the founder, like to analyze the person in all the levels, all the signals that they can give you, not only about the numbers, it's just more also that which person is giving to you the idea and who is like representing that business, right?
Yeah, I mean, coachability is important. Coachability doesn't mean obedience. It's like you don't have to like listen to everything I say, because that's not the point. I don't want my founders to agree with me. I think the key is I want founders to absorb feedback. The key is iterative. They need to pivot if they see something, that new information that comes into the marketplace, that comes into, I discovered something new. Because ultimately you're still searching. So if you're in that search phase, you're always going to be absorbing new information. The key is that founder willing to change? And that when you know that if the founder is not willing to change, it's an emotional decision. Because if new evidence comes in that disproves his hypothesis, the problem, and he or she doesn't want to change, that tells me that they're still stuck to an emotional attachment to it. That's very, very important, in my opinion, is you can't be stuck. You have to be able to pivot to whatever the new information that's coming in. So I think the best founders are those ones that can be flexible enough, still be stubborn, still be mission driven, but flexible enough to change whatever the market, your customer, is telling you you should be doing.
You're right. That's perfect. And why Canada? Why focus on founders in Canada? What do you think about that?
Yeah, Canada, I mean, it's a great market. Canada has like the best university. I think it was just ranked number 5 in the world with the number of the top like in terms of overall university system. So we have a very respected higher education system in this country, which means that we have a lot of talent, a lot of smart people that come here. So I think in that case, we love founders that have a really specific domain knowledge, whether they're computer scientists or whether they're doctors or whether it's some type of engineers. I think Canada is a great place because our system is so powerful in terms of the higher education system and respected globally that there's enough talent here that if they're willing to go that route of starting their own business, of commercializing their research, then what a great place to be. I mean, the United States, everybody talks about that, biggest economy in the world, most liquid economy, best universities in the world. But I would say that Canada is a smaller market. It doesn't mean that we're not less. I think we have the same amount of talent as they would in the States. It's a smaller market, but ultimately, yes, you want to grow it in Canada, and it's a great place to like make sure the validation is there, and then scale it in the United States, which is just next door.
Okay, but there are some research, like the HEM research. They were saying like the people or Canadians investors are not investing in the early stage. They are focusing more on the business that are already working right now and they are making profits. So why you decide to focus on the early stage?
Yeah, I think for us so my partners and I were generally, when we worked in the capital markets, we worked at the small cap stage, we worked at the large cap stage. So we already had that experience and we already went through the cycles using those types of companies. I think early stage, in my opinion, or in our group's opinion, is that's where most of the early stage ventures is where you get the biggest return on your investment. So I know it's the most riskiest because, it's 9 out of 10, you're going to fail. But that one that you hit is a huge one, right? It's like hitting like a gusher in an oil field, right? That's the one. I think in our case, our expectations are not to hit like a. Well, I mean, we would like to hit $1 billion company, but I mean, we're happy with 50 to $100 million hits, and then maybe we could like talk about maybe an exit or something along those lines where we could get out after 5 years. So we want to like we don't want to stay in long. We want to like have an exit so we can give the capital back to our investors and then move on. It's kind of exciting to do that because looking at founders, they have like they're so open in terms of the world and how they look at things that it's such a treat to see them grow the business from like nothing to something, and that really gives us the most satisfaction is creating that value with them. And I think that's the journey. We like the journey as much as we like the exit.
That's really good that we at least have investors in Canada that are focused on the early stage and they are trying to understand all that path with the founders. We know that universities they are preparing people to create business, but we know that there is a gap on communication when they come to the investor. So, what do you think that is missing in the universities to close that gap to go directly to the investor and have the investment?
Well, I think, Canada, and then I'll move to the university, but Canada has access to capital. Canada has access to talent, which we just said. Canada has access to customers and market. They have those 3 points. So we're a G7 country. Of course, we're going to have those type of markets. They have strong talent. They have strong universities. They have strong ideas. There's no question about that. But the problem, I think, with Canada is they have this scale up gap, not an ideas gap, right? Ideas are good. The problem is that the scale up gap means once you get past our stage, which is the early stage, the angel stage, and then you move further onto Series A, Series B, and so forth, I think it becomes these bigger pooled type of funds, like these pension funds or these VC funds that are much bigger than us. I think those are what's lacking in this country. Is like we're lacking in Canada unicorns. In other words, Canadian companies grow to a certain level. Let's say they grow to 60 to $100 million, and then they usually get bought out, or foreign money comes in and buys them, and they have more control, and that means they go to the country that their investors are in. So, for example, one of our tech companies that we invested in that we had an exit in 2024, he left. So he had a buyout, and he went to Dubai because most of his investors ended up being there for his second company. So this is the problem I see in Canada is Canadian companies, they leave because, they reach a certain level. Investors like me have an exit. We're happy. We get our money back. But that company ends up not staying in Canada. Most likely they would go to the United States, or they would go to a country like Dubai where that's where you can scale even more, where I think the depth of the capital markets or the depth of the liquidity of those markets are just greater than Canada. So I think that's one of the problems that I see. So we're good at creating startups. So we, meaning Canadian people, Canadian universities, are great at creating startups, but they're weaker at helping them become global category leaders. That's what I think the weakness is in Canada. So we need to say this is government needs to incentivize more. Our tax structure needs to be different, for example. The Prime Minister of Canada is talking about inviting in September the top companies or the top funds in the world to invest more in everything's big, big, big. But I think another area I think you should look at is on the other side of the scale is maybe we should create funds or maybe create a conference or some type of symposium on how we can address this issue that I just talked about is grow these businesses from the bottom up right here in Canada. So he's attracting international investors, which is fine. You're going after that end of it. But I think what you're ignoring is what we're talking about here today on your podcast is how can we nurture and grow Canadian companies, Canadian unicorns, Canadian innovation, and keep them in this country.
Yeah, that's true because I know a lot of news that a lot of university funders just went directly to United States for fund. They didn't fund nothing here in Canada. And that's a shame because all of these good ideas, they are just going away to another places. But also, right now there are existing new platforms, digital platforms, that they are trying to help these startups, they help these businesses that they are just starting as a early stage
Mhm.
to develop tools for find investors. I don't know if you know any of these platforms like Ghost, like AngelList, but what do you think about these platforms? Do you think they're also helping the startups or the founders when they just go out from the university?
I don't think so. I think this is another gap you see is I don't think universities are preparing these entrepreneurs, these technical entrepreneurs, for example, really scale their business. I think there's a big gap between what investors would like to invest in and universities. I think universities really need to do more to showcase these talented students that are interested in growing or starting and growing businesses. Because what better place? Universities is where the cutting edge of research is. Like professors, even, you can't just include students, is if they want to commercialize their research, if a student has a technical domain that he or she's good at, then I think universities need to try to focus on not just like the curriculum itself, like the idea, creating the pitch deck, and presenting the pitch deck in class. I think it really should be is closing that gap and maybe inviting like angel networks or maybe early stage venture capitalists to really stress test those ideas. I mean, let's face it, not all these ideas are going to be commercializable, but I think it would like definitely save a lot of time in terms of those students that really, they've worked on their idea for like 4 years and they're ready to go. And then all of a sudden it just drops versus those students that are actually serious about growing that particular university technical domain that they have. So I think the incentive, I think, for universities may not be there. And, just as Carl Munger says that you need incentives and maybe universities don't have that incentive
Mm.
to kind of connect the VC community, let's call it the capital markets community, to these university entrepreneurial departments or programs.
So yeah, they don't see the necessity to have it, because nobody say to them like, "I want to be an entrepreneur, a real entrepreneur," and maybe the tools the university is giving to me is not enough because they don't know that it's not enough.
Yeah, I mean, universities, in all fairness to them, they're in the game of education. They're educators, they're researchers, and students go there, they get their degrees, and then they move on. So I think, granted, some universities, like the bigger ones, and like University of Toronto, University of Waterloo, they have really strong technical like programs that they really encourage their students to like start something. It's not an add-on. It's more of like in the integration of their whole school. And I think those universities that treat entrepreneurship as like a external, oh yeah, we have a program, but they don't integrate it into chemistry or biology or sciences or engineering or whatever. I see that I don't think they're as successful as those larger schools like Waterloo, even TMU. They have a whole ecosystem that's around entrepreneurship, and I think that's a huge disadvantage. I think that universities have is that they need to like not just like make entrepreneurship be a program, they need to integrate it into every single department in their school, not just the business department, where you pull these students in and say, okay, you have an idea. Let's stress test the idea. Let's go through the process. Let's look for evidence. In other words, fail fast. If they could fail fast, okay, then I don't have to work on it so long. I could see some of these universities are still lagging behind these bigger universities.
So I want to ask you something about what role can digital platforms, AI, and communities realistically play in developing judgment and execution in founders, and where do they fall short?
I think digital platforms would play a key role in the due diligence process. It would just be faster because, a lot of what we do in our due diligence takes about 3 to 6 months to go through the process, to digest the business plan, the go to market strategy, the pitch deck. We go through the financial statements or the financial modeling. That takes time. So, with a small group of people like us, I would say realistically, it would take like 6 months. So, that would be cut down. So, digital platforms, with the help of AI, would cut that down to maybe like 1 or 2 months or less. So, I think for us, or our competitors for that matter, the more speedier you are to the market, or faster you are to the market, I think AI would be very helpful. And I'm not saying from a judgment perspective, it can't replace judgment completely, But what it could do is give us options. It could give us these multiple different options in terms of what direction could we go in. And then, of course, from a human perspective, we have to figure out the best option for us. Because in our case, in our fund, our investment thesis is mainly in fintech. So not to say that we don't listen to other areas or I consult with other founders, but we already know the numbers in fintech.
I
That's
see.
why we choose fintech is it's easier for us because if you tell us, what's the break even point on credit cards, we don't have to analyze that. We already know it. So we know our metrics. That's why if you go outside of that industry,
You have to
we'll
do
have to do a little bit of
research.
homework and say, okay, I don't really know much about I don't know, like this wearable devices or medical devices or whatever. I mean, we could find it, but it's just going to take longer. So in fintech, we already know the numbers. All the guys that are in it know what we're looking for. If a founder is going to say a number, we'll know if that number is right or wrong. So I think in platforms, particularly with an AI component, it really will help us give us options. It'll make it much speedier.
But right now, with the platforms that exist right now, are you using any for your work as investor?
Well, no, we're not using those ones like Gust, for example. We don't use those. Our main focus is our deal flow is through word of mouth. We find our founders because of referrals. It's because I know you recommend me to somebody. So, for example, when I was in Montreal, I was in a panel session at McGill University, and a guy was listening to me, and my student told him about me because she was in my class. He contacted me when I got back to Toronto, and I met with him. It's a fintech play on alternatives. So that's how it works for us. It's just we don't have like a website. We don't have we're not like a typical business because we don't want people to contact us. We want them to contact us through referrals. That's the easiest way for us to do it because quite frankly, we don't want to get bothered all the time, right?
Mm-hmm. But you think is it possible that you go from word of mouth to a digital platform? I mean, stopping the word of mouth and maybe start using a platform to find entrepreneurs. Do you think that's possible?
Yeah, I think so. I think if you position it right strategically with kind of like Gus does or PitchBook or whoever they are, I think it's important to know that there a gap? Yes, the gap is in the universities. And that may be what you're trying to accomplish with Grow Dome is you're trying to create that need where university entrepreneurs can meet with people like me in an easier way, a more frictionless way.
So, if you could redesign how Canadian universities prepare founders for investment, what is the single most important change you will make?
That's a good question. I would say to understand the process of going from an idea to evidence and having the process in place. Once you have the idea, you let the students go through the whole process to see if its evidence is there. In other words, is it worth it? Is it worth it? So they have to kind of find a way to show that it's going from a good idea to a marketable venture that's going to produce value. I think that process needs to happen, number one. So number two, once you have that in place, you need to have some type of capital mechanism where, like I said earlier, you need capital to start flowing into these universities. I'm not talking about just from student tuition or from research grants. I'm talking from VCs, pension funds, companies that have that commitment to invest so they can grow their value to their shareholders. I think universities need that interface where they could once the student has the idea, has the evidence, they go right into the market or right into the capital and say, okay, let's see if we can actually make this work.
That's perfect. So thank you so much for all this knowledge from you. I think all of the people who's gonna listen to this capstone is gonna be really happy with all the information that you give us.
Thanks for having me, and good luck on your capstone course and good luck on your career.
Well, that brings us to the end of today's conversation. What stands out from everything we discussed is that early stage investing is not just about ideas, it's about judgment under uncertainty, clarity of thinking, and the ability to recognize potential before it becomes obvious. For university founders, the gap between having an idea idea and being investable is often not about the quality of the idea itself, but about how it is understood, communicated, and validated in the eyes of investors. And that is exactly the gap Growth Dome is trying to explore and close. Thank you for listening, and we'll see you in the next one. Thank you.